Alright guys, this is the part 2 guys of the fixed asset guys. So this is where I left, right? We concluded by doing the asset disposal, so now we're going to continue and then to do the fixed asset, right? So this won't take us a long time guys. We just want to do it quickly, then we're done. So people will decide what to do from there. Okay, right, so now we cannot see. Let me put myself here by the corner. What do we do here? Okay, let me put myself here. Okay guys, what is important about this note? This one, I don't want to lie, and it applies everywhere in accounting guys. What is important here guys is for you to know the format guys. The format in accounting never changes guys. You do income statement, you do balance sheet guys, the format is the same guys. You do fixed tangible asset guys, it's either in return, wherever guys. When you do the fixed tangible asset guys, this is the format. This is the format guys. So rather know this format, and then what comes on those amount guys, they come after guys. What is important is to know the format guys. The format is simple. Right, why am I saying it's simple? Is because guys, you look at this. We look at the beginning of the year here. Okay, let me write at the beginning of the year here. It will cancel again. Okay, at the beginning here, at the beginning guys. So you look at the cost, you look at the accumulated depreciation, then these two, they will give you what? The carrying value. Are we together guys? So this is a step going down. Are we together guys? So these are the things that we came with from the previous financial year statements guys, or the accounts, right? So this is what happened. The opening balances. How much was the cost of the equipment when we opened our books? We go back to that question paper here. So our question paper was having, let's go there. Alright, in the equipment guys, our balance brought down here, the cost is 223,000, and the accumulated depreciation, the opening balance is 130,000 guys. So you see, these things guys are so amazing guys, so straightforward, right? So we're gonna take our cost price and we subtract the accumulated depreciation. That's how the carrying value is calculated. Cost price minus accumulated depreciation guys. Simple as that. Then now what are we going to check? We're going to check the movement guys. The movement simply says what happened during the year. Did we buy asset? Did we sell the asset? And also the depreciation of our asset. Either we sold or we didn't sell. We need to calculate the depreciation for the year. Are we together guys? So let's start with the addition, right? So let me move this okay, sorry for that. So let me move this up here because we're done with that part, and then now we can focus here. So what happened is that we bought the asset guys. We bought the equipment that cost us 39,000. Therefore that is going to be our addition. And then this addition guys, because we are adding and then our equipment is affected positively, we don't put this into brackets because the asset is affected positive, right? The next thing that we're going to talk about here, it is the disposal at carrying value guys. This one is very important. Let me do this so that I will explain it further so that people can understand. All right. Right, okay, here we are. All right, so guys, what are we going to do? This is a disposal at a carrying value. Are we together guys? So the disposal at carrying value guys, we look at the cost price, are we together guys, of the asset that we are selling. The cost price minus the accumulated depreciation, total accumulated depreciation of the asset that we are selling. That is the disposal. We want to see that when we are selling this asset, we are selling this asset having this value. Are we together guys? So we have calculated the we know that the asset that we are selling, it is having a cost price of 15,000, right? So we're going to say 15,000 minus 8,472. Where did we get this? If you go straight to your asset disposal, you go to your accumulated depreciation account, you will see whereby you are having this value of 8,474. Let's quickly go to asset disposal, guys. I will show you that value. Here's that value, guys. Here's that value. Remember, here we are subtracting the total depreciation of that asset since day one up until the last day when we are selling that asset. So it was 7,320 plus 1,152. That is the total accumulated depreciation of that asset. So what do we do here? We just say the cost price of that asset that we are selling minus the total accumulated depreciation of that, so that we're going to get the disposal at carrying value, that when we are selling this asset is having this value. Understand, guys? So that is what we need in our fixed asset or our tangible asset, guys. So when we are selling that asset, we are disposing the asset with the carrying value of 6,528. We don't care about how much we sold the asset with, or we don't care about that. What do we need? We need the original value. Are we together, guys? Original carrying value. That we sold it on a profit or on a loss, we don't care. What do we need? We need the carrying value of the asset. Right. Secondly, we're done with then now what do we do? We just put our disposal at carrying value inside the bracket, because that value now, it is no longer going to count here. We must take it out of 130,000. We must take it out because the asset is no longer with us now. It is moving out of our company now. That is why we subtract it. Are we together, guys? So now let's come to here. What do we calculate here? Here we calculate the depreciation for the year. We are not going to count, guys. We are not going to count. Let me repeat. We are not going to say we exclude the asset that we are selling. No. We calculate the total depreciation for the year. Therefore, we also include the depreciation of the asset that we are selling, because the asset, we did not sell it at the beginning of the year, but we sold the depreciation during the year. We sold the depreciation during the year. The asset during the year. That is why now we also include the depreciation of that asset from the 1st of January up until the 30th of September. So we also need the depreciation for that. So to get this 23,000 here, guys, we simply say we simply come back here. We say okay, let me go to accumulated depreciation. You will see we're going to say, let me move this here. We're going to take 1,152 we added with 22,264. That is the depreciation of the asset that we sold for this year, and then this is the depreciation of the new assets, and also the depreciation of the old asset. Then we're gonna get the depreciation of the year. Alright, guys, let me move this here, and let me come back here. Correct. Right, then we're done with that one. That was the movement. So the movement, it will never change. Movement will never change. It will only have these three. But you're always going to check the context, that in this context there is no asset that is sold, or we don't have any new asset that is bought. Therefore, you won't have addition, or you won't have the disposal and the carrying value. You'll only have the depreciation for the year. This one, guys, it will always be there. Whether you sold or you didn't sell any asset or you didn't buy any asset, you will always have the depreciation for the year. Right, let's move into this bottom part. You see this part here, guys, I call this my closing balance. Look at this. This is the cost. Where do we get this cost, guys? You go straight to your equipment account, you check the closing balance, the balance carried down, guys, the balance carried down. So our balance carried down here is how much? Let me do this. Our balance carried down here, guys, is 247,000. How did we get that? We get that 223,000 plus 39,000 minus 15,000. Then we're getting the cost of the asset that we have. We bought an asset and at the same time we sold another asset. Therefore, the cost of the asset that we have during this year, guys, we are having 247,000, guys. So that is simple as that, guys. Therefore, now let me move it back and then check the accumulated depreciation. Now we need the closing balance of the accumulated depreciation. Go to accumulated depreciation again, look at the closing balance. Here's the closing balance. It tells us that our total accumulated depreciation for this year for the equipment, guys, is 144,944. Simple as that, guys. So that is at the end of the year. So that's how you're going to, that's why you see this amount here, guys. This is at the end. Let me write it here. Let me write it here that this is the accumulated depreciation at okay, at the end. Right. This accumulated depreciation at the end, then we will be done. Then what do we do? Accumulated depreciation always, guys, is in the bracket. You put that amount inside the brackets to show that this is a negative amount, guys. Then what do? We just simply gonna take 200 and where is my here's my pen. We're gonna take 247,000 minus 144,944. Then we're going to get our carrying value of 102,056. And what does this mean and where does it go? This amount goes to the balance sheet. This amount, guys, it goes to the balance sheet. It goes to the balance sheet, guys. Goes to the balance sheet, guys. Simple as that. That means now the equipment that we are having, it is having a carrying value of 102,000. If we want to sell this asset, we must sell it at 102,000. If we sell it at a price more than 102,000, that means we're gonna make a profit. But if we sell this asset at a cost of less than 102,000, that means we are making a loss. Then this is how, guys, simple we do the fixed asset note, guys. So this was my part 2 of the fixed asset, guys. So I thank you for watching this video, guys. So if you have if you need more clarity, guys, don't forget, come back to my, let me go back here. All right, you're gonna come here, guys. Here, there's my numbers. You're gonna get all the information that you want, guys. You can also subscribe to my YouTube channel, guys, to check out more videos. I will be posting more videos, guys. Again, thank you for watching this video, guys. I hope to see you in my groups, guys, because it's gonna be very hot. It's gonna be very hot, guys. I don't want to lie with that one, guys. It's gonna be hot. So with this one, I'm just having a bit of time, limited time, guys, because this I'm just recording the videos. But when I'm gonna be live, guys, with my learners, guys, I won't have a limited time. When I said I see them 2 hours, it's gonna be 2 hours, guys. So here I just have to keep my videos short, guys. So let me not the waste of any of your time. Thank you for watching again. Wait for more videos. Check out all my other videos, guys. Thank you.